Hello, everybody. So today I want to talk about e.l.f. stock, a stock that I like very much at these levels. Title of the video, e.l.f. is not like Estee Lauder. And so let's get started. So e.l.f. is now cheap. It was already cheap yesterday. It got even cheaper. Yesterday the stock was down because of China. Health, of course, makes nearly, not exactly, but nearly 80% of their products in China. They imported to the US. There's a 10% tariff. Now, that tariff, in my view, will be paid by supplier concessions, margin concessions, and a little bit of a price increase. But really, I don't think it's a big deal. The market didn't like it, and I understand because it's uncertainty and they don't know what's going on. But, new announcements on trade can happen at any time. I mean, you could have 1 week, 1 month from now, at any time you could have a tweet that says, hey, by the way, we've decided to suspend the tariffs on China because they agreed on X, Y, Z. So I'm not too worried about that. I don't think it's a big issue. I think it's something we can absorb. But I'm thankful for tariffs because we're getting a big discount on the stock. No financial advice, of course. But today we got an even bigger discount. Why? Because Estee Lauder, which is the leading cosmetics company in the S&P 500, well, the media is having a fear festival, as I'm calling it, on Estee Lauder's expense. And you have, of course, every 5 minutes an article, they're laying off 7,000 people. I believe that would actually be a good news for Estee Lauder. They got to get those fresh clicks. That's why the articles work like this, and you see all of these negative articles. And I believe e.l.f. may be falling in sympathy right now, falling in sympathy with Estee Lauder stock. But this is the revenue trajectory of Estee Lauder ever since 2013, 2012. Here you can see the revenue at Estee Lauder is on the decline. Now, this is the e.l.f. revenue trajectory since 2019. As you can see, there is a pristine exponential curve on revenue going on for e.l.f. And if you follow growth stocks that do well, if you follow growth stocks that grow quickly at about a consistent rate quarter after quarter, you recognize this chart. You recognize the inflection. Take any growth stock, they will have this inflection, and this is the center of that curve, that S curve, the beginning of that adoption. So e.l.f. is there, in my view. e.l.f. is growing very, very fast. Estee Lauder is not. And the layoff is probably a good thing for the stock because Estee Lauder is an old company and they have had a lot of inertia, a lot of employees, a lot of people work there. 48,050 employees. e.l.f., on the other hand, has 475 employees. So e.l.f. essentially is the thickness on the line in a chart. If you were to chart the employees, e.l.f. is a rounding error. The number of employees at e.l.f. is a rounding error compared to the number of employees at Estee Lauder. And so when I put it in my spreadsheet, pay close attention to the productivity here. The productivity at e.l.f. is 2.6 million per employees. The productivity at Estee Lauder is $320,000 per employees. And why is that, right? Because e.l.f. is essentially having a bunch of machines, a bunch of robots manufacture the makeup in China, right? And I bet you the supply chain at Estee Lauder looks nothing like e.l.f.'s supply chain. And so that's the reason the newer company is so much more efficient. And this efficiency can be found in my numbers because when I ask the question, how much am I paying for that growth? Now, thanks to the trade war and thanks to Estee Lauder, e.l.f. is looking the cheapest. This is my spin on the PEG ratio, enterprise value over gross profit over revenue growth. How much am I paying for the growth at e.l.f.? I'm paying a 0.15. Now, how much am I paying for Estee Lauder? Well, guess what? I'm not paying anything because I'm at a minus 1%. So Estee Lauder sales are declining. e.l.f. sales are growing quite a bit. e.l.f., of course, achieves a rule of 40 with a 62, and Estee Lauder is not even close to a rule of 40. They're at a 15. So this is a behemoth. This is a big company. This is a turnaround story for e.l.f. That's why the layoff is probably a good thing for them. And for e.l.f. So Estee Lauder, I meant. And for e.l.f., of course, this is a growth story in the making. And by the way, as an aside, this is why I am very wary and very careful of the S&P 500. This is why I don't touch index funds and the S&P 500, because I would argue that a lot of the PE, the current price to earnings ratio, and you know I don't care about PEs on this channel, but the current price to earnings ratio for Estee Lauder is a 53, and you get no growth. And the PE ratio for e.l.f. is a 26, and you get plenty of growth. And of course, e.l.f. is not in the S&P 500. Obviously, Estee Lauder is in the S&P 500, just in case they are successful in that turnaround. And again, I don't know Estee Lauder. Estee Lauder may be very successful in their turnaround. I don't know. What I know is that there's a lot of companies getting disrupted left and right in the S&P 500. Maybe Estee Lauder is not one of them. Like I said, I'm not a makeup specialist, but I can think of dozens of them who are getting disrupted left and right by leaner, smaller, more agile players that are coming from outside and just disrupting. And again, I don't know much about makeup, but just looking at makeup, I can see where the growth is going to come. This is Instagram-friendly media material. Video. This is not Instagram friendly. This is just not. You look at the commercials, one of them is Instagram friendly, one of them is not. One of them is targeting Gen Z, younger millennials, the upcoming generation alpha. e.l.f. is targeting those younger women, which is where the growth inevitably comes from. The growth, it doesn't matter which company that you take, the growth always comes from the customers that are early in their consumption life cycle. The customer at Estee Lauder has to work hard to try to get to recruit the customers who are today 15, 20, 25. Who's doing a good job at doing that? In my view, it's a company like e.l.f. And I look at the marketing. I think the marketing is highly relevant. And if you follow e.l.f., it's this company is an actual marketing machine. They are very good at marketing. So in my view, you clearly have an older world company and a newer world company, and the stock is selling off in sympathy, and I don't think it should. And so that's why, answering the question that I got in the comment section of the video yesterday, what am I doing? What's my game plan? Well, if you follow me on Patreon, you know that I wrote some, I didn't buy them, I wrote them, I sold them. I sold some cash secured puts, and I'm hoping to get a sign. Why did I do that? Because I find the volatility is extremely juicy at 196% volatility. So as an example here, these are not the ones I bought, but as an example, right now, when I make this video, you collect a 565 premium on 8,700 of collateral, and so that's an amazing yield for just a 3-day expiration date. Of course, the volatility is so high because you have the earnings, but when I look at their history of earnings, they typically beat on earnings. Now, just because they beat on earnings doesn't give you a guarantee that they'll go up on earnings. It's a risk and it's a risk I'm willing to take because I want to enter the stock at these levels. I find the stock cheap right now. And again, in my spreadsheet, it has now crossed Oddity, which used to be my favorite in the sector. Now e.l.f. is cheaper than Oddity thanks to the trade war. Unfortunately for Oddity, they make their product in Europe, I think Italy. And so unfortunately for Oddity, they have not been impacted by the tariff. They don't have the discount. I'm not losing hope. There may be tariffs on Europe, and then Oddity could be impacted by that quote-unquote tariff discount. But for now, it's e.l.f. who's being impacted. So I like e.l.f. very much. As always, this was not investment advice, not financial advice. This is just entertainment, hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.